Good evening, good afternoon, and good morning, everyone, depending upon from wherever you are connecting. Thank you for joining us today for this webinar hosted by the Global Advisory Alliance and Tarini Meta and Partners with Carbon Market Association of India as the supporting partner. My name is Aayush Anand, and I am delighted to serve you as a moderator for today's discussion. Our webinar today focuses on a topic that is rapidly moving from policy discussions into business reality, which is focused on carbon pricing at the border, navigating CBAM in EU-India supply chain. The European Union's Carbon Border Adjustment Mechanism, commonly known as CBAM, marks a significant development at the intersection of climate policy and global trade. While its primary objective is to support the EU's decarbonization goals and ensure a level playing field for domestic industries, its implications extend far beyond Europe. For businesses engaged in EU-India trade, CBAM is introducing new reporting obligations, compliance requirements, and strategic consideration across supply chains. Exporters, importers, manufacturers, consultants, and policymakers are all navigating a rapidly evolving landscape that will influence competitiveness, market access, and sustainability performance in the years ahead. I am really pleased to be joined by an outstanding panel of experts and would ask them to please introduce themselves, starting with Mr. Ankit. If you could please introduce yourself.
Definitely. Thank you for having me, Aayush. An absolute pleasure to be joining today. I'm Ankit Todi. I'm the Chief Sustainability Officer for the Mahindra Group. The Mahindra Group is about a $100 billion conglomerate operating primarily in India for the last 80 odd years. And we operate in a number of different sectors, almost 20 industries, primarily in manufacturing across auto, farm, but also in services sector, in the IT services, financial services, green energy, and a few other areas. So absolutely delighted to be on the conversation today.
Thank you, Mr. Ankit. It's a pleasure having you here. Next, I would request Mr. Rohit Kumar, if you could, sir, please introduce yourself.
Yeah, so thank you, Aayush. I'm Rohit Kumar. I'm Secretary General for Carbon Markets Association of India. And I'm also Secretary General for SAF Association. So our focus area is to accelerating net zero transition. And we are working in India from last so many years. And we are glad that more than India's 50% carbon credit belongs to our member. Gradually, we are also working in the CBAM space, as we understand that CBAM and carbon market are interlinked together. So we have to play a much larger role in capacity enhancement, skill development, and making industry ready for CBAM compliance. And at the same time, we are focusing on CBAM as an opportunity also. Thank you.
Thank you. Now, I would request Ms. Ieva, if you could go in next, please.
Thank you so much, Aayush, and I am delighted to join this webinar. My name is Ieva Baršauskaitė, and I lead trade, climate, and industrial policy work at the International Institute for Sustainable Development. The IISD is an award-winning think tank that is headquartered in Canada. However, we are operating globally, working on topics such as energy, resilience, trade policy, economic justice, and whatnot. We are not only the Western think tank, we also have teams operating in India, Indonesia, and South Africa, and that list is only growing.
Thank you, Ms. Ieva. We are really looking forward for your perspectives. Now over to you, Professor Dr. Tarini Meta. If you could please introduce yourself.
Hello, I'm Dr. Tarini Meta. I am an academician. I'm an advocate. I'm also an ESG consultant. Over the past 15 years in sustainability, I have held various senior academic roles. I have advised companies and institutions on issues ranging from environmental protection and compliance to ESG implementation issues. I'm the founding partner of an ESG consulting firm, Tarini Meta Partners, and I also run the MC Mehta Center for Education and Research, which has a branch in London as well as a branch in Delhi, and works on furthering ESG education by offering certificate courses and professional courses on ESG. We also offer the GRI professional certification, ISO 14064 lead auditor program, across UK, Europe, Asia, Middle East, Southeast Asia. I'm involved in the consulting side as well as the education side of ESG.
Thank you, Dr. Mehta. Last but not the least, I would request Mr. Terry Ellis, if you could please introduce yourself.
Yep. Hi, everyone, and thanks for the invitation to speak here today. My name is Terry. I'm based at S&P Global Ratings. I'm part of our sustainability research team in the ratings division, and I'm focused on climate transition risks, of which CBAM and the related carbon pricing regulations are definitely a key topic of interest for us. So very happy to talk about that today.
Thank you. It's really a great pleasure to have you all here. And to set the scene and establish a common understanding of CBAM and its broader implication, let's begin with our opening round of questions. And to the participants who are joining in, if you have any question which you want to be addressed, please feel free to drop in the Q&A box available. You can see it in under the More section. Now, question for you, Ieva. I would like to start with you. CBAM is often described as a climate policy, a trade policy, and even an industrial policy, all at the same time. From your perspective, what problem is CBAM trying to solve, and what should business understand about its broader objectives?
It's a great question. Thank you for it. Because I do feel like CBAM is all of the above, but first and foremost, CBAM is never or should never be a standalone instrument. CBAM is a support policy for the domestic climate ambition and for a very specific approach to raising domestic climate ambition, that is carbon pricing. Once a domestic carbon price rises sufficiently to be way higher than what the region or the world price is, the government faces a challenge that we call a risk of leakage. Some countries will call it carbon leakage, some will call it competitiveness leakage, but it means the same thing. The implementing jurisdiction is facing a challenge and a problem of manufacturing moving to jurisdictions with lower carbon price and better competitive conditions. This is where CBAM has come in. CBAM starts addressing the carbon price at the border when the imports come from jurisdictions where the prices are lower or don't exist at all. This preserves the same competitive conditions in the jurisdiction for the domestic producers and for the importers. But it also creates a lot of additional requirements for the importers that are not necessarily even existing in the domestic jurisdiction. So CBAM is a complex tool. We need to always, when asking about whether it's a fair tool, whether it has a right to exist, our first question is, does it follow a domestic carbon pricing? Does it follow the rise of ambition in the jurisdiction that is applying to it? Or not, because we have seen quite a few suggestions about the introduction of such instruments without a domestic carbon price, which then clearly shows that this tool is only aimed at addressing certain competition issues, but not necessarily the climate issues. One thing to keep in mind is also that CBAM is supposed to be a temporary instrument. It is only here until the industry globally decarbonizes sufficiently for those inequalities to no longer exist. It's not to say that the prices need to equalize themselves. We are talking about the technological transition as well. We're talking about the time that it will take for the CBAM and the carbon pricing covered industries to move to a cleaner production. I'll stop here.
Thank you. Thank you, Ieva. That provides a useful foundation for our discussion. Now, Terry, if we look beyond CBAM itself and consider the broader climate transition underway. Now, I also come from a climate risk background, so I would like to really look forward to this. Which industries do you believe face the greatest risk from carbon pricing mechanism over the next decade, and why?
Yeah, great question, and I'll just build on what Ieva just mentioned there. So, if we look globally at all companies and think about those which have the highest emissions, we're talking about utilities, we're talking about industrial companies, energy companies, and transportation companies. Those four categories have the highest emissions in terms of absolute emissions and also emissions per dollar of revenue generated. And so when we look at carbon pricing regulations, I mean, it's no coincidence that those regulations tend to focus on those types of industries first. And that was the case with the EU. So when the EU's emissions trading scheme first started, it was focused very much on power and industrials, and gradually over time it has expanded to cover, for example, transportation. So shipping and aviation are now part of that puzzle as well. And we can even see it in other markets with carbon pricing. So, for example, China has followed a very similar pattern, mainly power generation to start with. And just last year, it announced that steel and cement emissions would also be covered under its pricing scheme as well. So, when we're looking forward and we're thinking about which sectors or industries might be more exposed to carbon pricing risks, that's the pattern to look out for, I guess. So we can see many countries now are looking at carbon pricing, both as a way to manage their own kind of climate goals, but also in response to policies like CBAM. And of course, as those policies are introduced, then companies are faced with risks and they have decisions to make about whether they invest in cleaner technologies, whether they think they can absorb the carbon costs, whether they can move production around, all of those types of mitigants that they might have available to them. So I think that's kind of those sectors are the most exposed. And just to put a kind of a number on it, we did a piece of research last year looking at the impact of CBAM. So the EU, if you look at the materials that the EU reports under CBAM, that's about $110 billion worth of imports. And the CBAM cost could be as high as 15 or 25 billion on top of that. So when we're talking about risk, we're talking about, a risk of that type of magnitude, at least when it comes to CBAM. And then equally, as other markets expand this type of activity, those risks could increase as well.
Thank you, Terry. Really very insightful perspective. Now, Ankit, bringing in the industry perspective, since the organization operates across multiple sectors and international markets. So my question to you is that, how are companies preparing for CBAM today? And what practical challenges are you seeing on the ground?
No, absolutely. I think, there are going to be both short-term and long-term implications for different companies. Now, in terms of CBAM for the Mahindra Group in particular, there are no immediate implications because we don't necessarily operate in the hard-to-abate sectors directly, and as a result, would not have an immediate impact in the short term. But having said that, the coverage of the industries within CBAM will continue to increase over a period of time. So it's only a matter of time that we'll see some of our exports to the European market also get covered. And as I think it was pointed out earlier as well, that CBAM is just one of the regulations. It's quite likely that many other geographies will follow similar regulations over a course of time. So while, as I said, the immediate implications are limited, but the midterm implications are going to be much more significant. Having said that, I do look at the regulation quite positively because there are some second order impacts that have started affecting us in the immediate term already. As a company and, for India as well, the decarbonization story needs a business case. And what CBAM is doing is that for many companies in the hard to abate sector, especially steel in particular, we have seen that the level of activity and investments that are going into decarbonization has picked up quite rapidly. And, as a major consumer of steel, we have been committed to the World Economic Forum's First Movers Coalition. We have been working very closely with many of the large steel companies operating in India, but also around the world on low emission steel. May not exactly be net zero steel, but low emission steel. So what it is doing is that it is definitely helping us on our commitments as well, because what companies realize is that once they start putting the framework in place for measuring data, once they start engaging on this subject, they realize that the first 20 to 30% of the decarbonization at least is financially viable and sometimes even profitable. At the same time, what it's also doing is bringing together a lot of innovation from around the world into actual tangible pilot projects, etc. And then the third thing that I would say it's doing is that many of the assets that are being built in India, and India still is building a lot of core infrastructure as well as the capital investments for some of these industries, and these assets will stay for the next 20 years, 30 years. So what it's doing is that it's making the business case for some of these assets to be built right from day one. So all in all, what I see is that it's definitely driving a lot more investments and interest in decarbonization and accelerating that trend for India as well. So that's the high level view that I could share for now. Thank you.
Thank you, Ankit. So, Rohit ji, I would like to have you next. So, there has been significant discussion within India regarding the potential impact of CBAM on exporters. Now, which sectors do you believe are most exposed, and how prepared is the Indian market today?
So, thank you. And so I will start with what India stands for today. So India is only one of the cleanest major economy in the world. So our per capita emission is only 2, while per capita emission of Europe is reaching around 6 to 8. At the same time, China and US is reaching around 14 to 15 per capita emission. So while we have 17% of global population, and we have around 6 to 7% of global emission. So we are in a strategically well-advantaged position as a country. And our commitment for national determined contribution is also very strong, that our carbon emission intensity, GDP, by 45% by 2030, we are aiming for 2005 level. So India also have a major target recently as NDC 1 or NDC 2. Recently, we revised our NDC also, national determined contribution. So as a country, we are very much prepared for emission reduction. And we understand that as a world largest democracy, we should also believe on the focus on sustainable development and the growth. While discussion about the CBAM is very timely organized, since India, EU, UK has already signed FTA. So there are a lot need to be played in this space. And CBAM is also giving us a lot of opportunity in terms of trade after signing FTA between India and EU. While we understand that the climate performance is going to play very, very important role in the trade, upcoming trade, which India and EU is planning to do. We also understand that the sectors in the CBAM, like iron, steel, aluminum, cement, fertilizer, hydrogen, and electricity-related value chains are there. But as a country, all of these sectors, we understand that steel is particularly impacting more. While studies indicate that 90% of India export currently covered in the steel sector, and they are coming under CBAM rule regulations. And at the same time, this is the most exposed sector right now in the CBAM from the India point of view. However, there is a great opportunity also for India in case we'll address the CBAM, not only for risk, but also an opportunity. Because global trade is entering the new era. And we understand that buyers will increasingly evaluate suppliers on the 4 parameters now. One is that cost, second is quality, third is reliability, and fourth is the carbon intensity. And the carbon intensity it creates a major opportunity for India now, because we believe that as a country, we are very clear that how India is going to be ready as the fastest growing economy, major economy in the world. And at the same time, one of the most ambitious clean energy market globally we have created. We're also very glad to share that we have 300 gigawatt energy as a country, and target is 500 gigawatt by 2030. So I think preparedness for emission intensity reduction is very much on as a country. And industries are really assessing the cleaner energy now. Industry are also focusing on green hydrogen. Renewable energy is the backbone for India. Now we are growing very fast in renewable energy space. At the same time, low carbon technologies are penetrating in the market. I think hard to abate sectors, CBAM sectors are already knowing it and equipped for the same. Recent development is that the government of India has announced CCUS mission. I think that can be a quick, immediate solution for CBAM. And I think this mission is going to be implemented at the end of this year. And that is giving industry a large incentive and support to especially hard-to-abate sector. I'm sure that all these opportunities like carbon trading system, CCTS, we already have in India, launch it. And the carbon market is going to operationalize at the month of October, November. At the same time, National Green Hydrogen Mission is also backing big way for emission intensity reduction. PAT scheme and is energy efficiency scheme we already have from long time. So we are carrying forward this. Renewable energy expansion programs are very much seen and progressive, and green manufacturing initiatives are already there. So I think together all these programs and initiatives are creating a strong foundation for low carbon industrial economy for India. We are a very large country. We have to play much larger role, I understand. And at the same time, most of the Indian companies are very much equipped. They understand their limitations, and most of these sectors are also coming in the Indian carbon market as a CCTS that lies in the Indian carbon market compliance market. Because Government of India has also taken the target, NDC targets, and added these sectors in the compliance list. So every company is ready for carbon accounting system. They already started. They are started MRV platform, monitoring, reporting, and verification platform. They are already focusing on renewable energy procurement, or understanding the importance. They are focusing on supply chain emission reduction and reporting patterns. They're also working on energy efficiency upgrades, how they can do inside the plant, refineries, and operations. And then at the same time, they also started so many pilot projects. I understand that many leading steel and manufacturing companies, which is going to impact CBAM largely for the carbon disclosure requirements, because they understand that carbon data is becoming more important. So all this framework is already started. We really encourage that Indian industry has taken big lead. And I'm sure that in future, MSME will need various support in terms of capacity building, financing, technology. And all this activity is CMAI is already doing as a Carbon Market Institute of India. We are working in India in this direction. And we are trying to create a very strong foundation for Indian market and also the sector which is impacting large in CBAM, so that we should be ready for global, not only market risk, but we understand that this can be a great opportunity for the country in coming days. Thank you.
Thank you, sir. Thank you for that very detailed walk down. Really appreciate your perspectives. Now, Dr. Tarini, I know you wear many hats as an advocate, academician, and as a very prominent ESG consultant. But here I want you to wear your ESG hat and maybe answer this question. So for you, the question is that for organizations that are only beginning to engage with CBAM, the challenges can often seem to be very overwhelming. So what practical first steps would you recommend for companies that you have not yet started preparing?
Thank you for the question. It's a very good question, very timely question. And I sort of want to start by kind of zooming out a little bit and focusing a bit on the bigger picture, which also links with what Ieva said, that CBAM is not envisioned as a permanent instrument. It is something which has been put in place in order to meet certain global goals. And those global goals or those global challenges is primarily one of them being climate change. The fact that we are heading towards runaway climate change. We are heading towards a temperature rise of between 2.6 to 2.9 degrees. And science tells us, IPCC tells us that anything above 1.5 degrees will lead to a whole host of catastrophic consequences, whether it be sea level rise, whether it be floods or droughts or food shortages, water shortages, etc. So this is our coming decade. This is what we're heading towards, and this is why ESG in the first place, why all these regulations, why all this pressure on companies. So it becomes extremely important to keep this in mind in order to then understand, for any company to understand what it should be doing, how it should put it in place as ESG strategy, its net zero strategies. It's in order for its approach, its vision to be holistic, it needs to look at this bigger picture. Because otherwise, if you look at, for example, CBAM as well, CBAM is one part of the whole ESG framework as it currently stands. It's just a subset, in a sense, of ESG as a whole. It has a limited purpose. Its purpose is to prevent carbon leakage, ensure imports face the same climate obligations as EU producers. So for this reason, it has a limited scope, but the various infrastructure and so on that is required to ensure correct CBAM implementation is extremely complex. So if a company is building this infrastructure, it makes more sense to build it holistically and to look at it from this larger perspective, which will also be a stronger foundation to build your entire ESG strategy on. So basically set your net zero targets in accordance with global goals, SBTi guidelines, set your ESG strategy in accordance with the role and the position of the company in the context of these global challenges. That's the foundation that needs to be set. With this foundation, then of course the next, I would say practical key step that companies should take, which applies very much to CBAM as well, but again, it applies generally to ESG, is having and building a very strong, robust MRV infrastructure, measurement, reporting, and verification infrastructure, which, as Rohit ji said earlier, Indian companies are focusing on building. This is, in a sense, the engine of that makes everything possible. In a CBAM context, of course, it's extremely important because for CBAM reporting, you need to report on verified emissions data. And without this verified data, then companies can, have issues in terms of default punitive values and so on. So it becomes extremely important. But then again, it also becomes important in terms of this larger perspective, that when you're setting this infrastructure up, you should set it up in the sense of your entire ESG strategy and ESG approach. And if we look at India currently, while companies are taking a lot of steps to build this infrastructure, there is still a shortfall. There are still challenges in this regard, particularly when we're looking at the MSME sector. There are a lot of challenges that these companies are facing. And then, of course, another key step, particularly now in the context of CBAM, becomes making sure that your emissions are verified by an accredited third party. For CBAM, this is extremely important. Self-reported data is not accepted. But again, this also connects then with this sort of bigger picture that, again, don't just approach this from a CBAM angle. Ensure that all your ESG data is verified, is auditable, because otherwise you could fall short of some other norm or standard, or you could also, get sued for greenwashing. And there's a lot of greenwashing litigation coming up nowadays. If it turns out that your data is in any way exaggerated or false, and so forth. So therefore, again, this becomes something that needs to be put in place by companies as they navigate ESG as it expands. And then, of course, it becomes extremely important in this context to keep just transition in mind. Whether we're looking at it from a CBAM point of view or we're looking at it in terms of ESG as a whole, there are sectors, there are segments of the population, whether it be micro, small, and medium-sized industries, or whether it be certain, sectors that are going to be phased out. There are people who are going to large segments of the population that are going to have to be reskilled, that are going to have to find new jobs as these sectors are phased out. So it becomes extremely important to put in place a just transition framework as we all move towards trying to meet our climate goals. That's something which needs to be considered and thought about as we consider and CBAM.
Thank you, Dr. Tarini. Those were really interesting perspective, and I would like to come back on MSME perspective that you gave just now in a bit. So guys, very excellent opening insights. Thank you all the speakers for their really thoughtful deliberations. Now, let us now move into a broader discussion and explore some of the strategic implication of CBAM for business, supply chain, investors, and policymakers. I would start with Ieva. So Ieva, what does CBAM means for future of global trade? And do you see other jurisdictions potentially adopting similar mechanism in the years ahead?
This is an excellent question because I think I'll start from a bottom, right? We already see other jurisdictions moving this direction. The UK has confirmed, that their CBAM will come into force next year. So from 2027, we have Serbia, who have introduced the CBAM together with their domestic carbon pricing this year already. There are strong signals from Australia and Norway that they might be moving this direction, as we kind of keep on hearing those news from Taiwan. There are serious considerations about CBAM in Turkey, and some talks about that in Brazil. So you can see that quite a few jurisdictions are thinking about introducing their own CBAM or like measures. Now, is that a universal measure? Absolutely no. CBAM is not for everyone. But what it means is that we're approaching the risk of regulatory fragmentation. And what that means is that the business that are exporting in the CBAM covered sectors might be facing divergent import requirements, diverging standards, diverging documentation, diverging even reporting periods in each of those jurisdictions. And this is where there is an increasing need to cooperate on what the people in my field are calling the interoperability of such measures. This is a reasonably novel conversation, and it's a bit weird to be talking about interoperability of measures that are not in place yet. That means that the governments who are still thinking about how their own measures will look like need to work about that. But the reason for that is reducing the costs for the exporters, reducing costs and the administrative burden for the exporters, and thus assuring that, for example, the business that is ready to export to the EU and that is complying to the EU CBAM standards can equally export to as many markets as possible, or that those differences can be overcome by as little effort as possible. I heard Tarini speaking right before about just how much of an effort a business will need to make just to comply with one regulation. Now multiply that by as many times as CBAMs can arise, and this is kind of this is what risk we might be facing.
Thank you, Eva. Now, Ankit, emission data is becoming increasingly important. So, what do you think? How difficult is it for large industrial groups to obtain reliable emission information across complex supply chain? And what lessons have you learned while preparing suppliers for these reporting requirements inside Mahindra? Yeah, what do you?
Absolutely, Aayush. I think the emission measurement is a very complex problem, and depending on the nature of the industry, the complexity varies quite a bit. So I'll maybe take a few examples to illustrate this. Very simply put, Scope 1 and Scope 2 emissions are generally easy, so I'll focus the conversation on Scope 3. Now, within Scope 3, the most complex category from a supply chain perspective is ultimately Scope 3 Category 1. Now, in the manufacturing sector in particular, if I were to take the Mahindra example, across our auto and farm manufacturing businesses, we have more than 3,000 suppliers. And these suppliers are a mix of very large multi-billion-dollar companies to begin with, maybe about 50 of them. Then you have a long chain of medium-sized companies, primarily majority of them in India, a few of them around the world, and then you have an even smaller long chain of companies. So the general focus is that how can you get to a level of data which may not be precise but allows for enough information to plan your programs. So what we do is that amongst these 3,000 suppliers and the kind of components that we buy, which also runs into multiple thousand components, we actually group them by categories depending on the type of material, and then using different types of emission factors and estimations, we sort of estimate the big categories where the emission footprint sits. So for instance, in our case, steel purchase from an entire family of products are a big part of the emission footprint. Aluminium, tires, batteries, so on. These are some of the big buckets where the footprint lies. what it helps us do from a scope 3 cat 1 perspective is that it helps us identify the hotspots where action needs to be centered. So then we accordingly are designing programs on how do we work with these particular buckets of suppliers. The other method that we use to get some more reliability on the data is ESG audits. Now ESG audits can't happen for all 3,000 suppliers. So there we follow a simple approach of 80-20, where we look at the coverage of 80% of our spend, which typically is about 500 to 550, 600 suppliers in that range. And even within that bucket, we typically exclude the ones which are very large companies, because the core thesis is that the reason to do measurement is to drive action. Now, when it comes to large companies, there is no need for us to scrutinize or necessarily, go and audit them per se. There is enough, assurance that is available for the data. There are good practices in place. So while we do different types of engagements with them, but our focus from an audit perspective and data collection perspective is then much more strongly directed at the medium-sized companies. So that is where we, we have a system in place where we ask for regular data, both at the annual level for many things, but in some cases also at a quarterly level. So that allows us to get a sense of, let's say, parameters like especially scope 1 and scope 2 emission for our suppliers. And it then translates into program like what is the RE percentage for a certain group of suppliers, what kind of awareness initiatives or what kind of specific handholding can we offer them in terms of decarbonizing, etc. And then we also have been running some specific subcategory programs. So for instance, on steel, as I was mentioning in my previous conversation as well, is that we run a program where we have brought together a bunch of different peer group players as well as many other steel suppliers together to set up the guidelines for emission measurement for the auto industry from steel. And then what kind of interventions, etc., are needed to bring down the average intensity of the sector. So that's one program. We similarly have pioneered a program which is directed for our tire suppliers, about 8 to 9 large companies around the world. And tire, unlike many people focus on steel, tire also has a fairly significant environmental footprint. So we have a dedicated program where we engage with our tire suppliers on sustainability and decarbonization, all of which sits in our scope 3. So it's a complex problem, but I think there are ways in which we address this to get enough information to be able to drive action in parts of the supply chain. Let me pause there. Aayush, I think you are on mute now.
Sorry for that. My bad. Thank you, Ankit. Your perspective was really very insightful and helpful. So, Rohit ji, over to you. I have a question for you. So now you come from carbon market background. So what do you think? What role do carbon markets will have to play in helping business remain competitive in a world where carbon cost is increasingly influencing trade? And also, could CBAM accelerate carbon pricing development within India?
Yeah. So thank you, Aayush. And we just want to focus on that carbon market is not just a compliance tool. So we usually communicate to the industry that this is not a compliance tool, but this is a competitive tool which we can really focus on, because every industry has to be there in the carbon market now in coming days. Either we know that in CBAM we are starting with 6 sectors now, many more sectors will come. So every business or industry has to be competitive. But at the same time, that carbon market is also one of the most powerful economic tool, which business is going to, all the businesses house is going to follow, because it is helping them for a low carbon transition. I think historically companies competed on cost, as I discussed, scale and productivity. Now they will also focus on carbon performance. So that is must for all sectors now in coming days. So this is where the carbon market become extremely important. And in the era of CBAM, the carbon market has to play much larger role to play, because it really helping companies for creating a financial value for reducing emission reduction. And while companies are getting competitive advantage in terms of, it has a very large role to large benefit for industry or country as large, because companies are focusing on renewable energy efficiency, cleaner production technology, waste value solutions, and green hydrogen, and also sustainable fuels and SAF and all those areas. So market is also coming with various co-benefits at large and helping nation to achieve their NDC target and finally achieving them to achieve net zero goal target. Carbon market is also preparing in a country to achieve net zero goal target. And all this compliance starting with the specific sectors now moving forwards to most of the sectors where emissions intensity is extremely high. But at the same time, it is also an advantage for investment mobilization, what we can say, because the International Energy Agency estimate that there is $1 trillion requirement. We have $1 trillion requirement for achieving net zero. Like India, some estimates say that India need $2 trillion in every 10 years to achieve net zero ambitions. So by 2070, we need $12.5 trillion approx. So that is a huge money where to come. So I think some of the study is claiming that carbon market can help us to achieve approximate 10% of that money in case we are able to shape the market in the very right way and right direction. And while at the same time, the country is going to be in the transition stage right now. So we have a lot of opportunity to generate carbon credit because most of the projects are in the renewable energy space, in the bioenergy space. We also have a large coastal areas, so large number of mangrove credits plantation can be there. So there are huge opportunity as India is one of the leading biodiversity hub in the planet. So India is also coming with many more projects opportunities, as we have already seen the success model in the CBAM era, CDM era, that India has generated around $10 billion as terms of carbon finance in CDM era. While in voluntary carbon market, we were the leading carbon market in the world. But at the same time, country is really shaping up, and carbon market is helping industry to participate in the decarbonization journey. So industry is now able to get accurate emission data. Industries are following it, and also transparent reporting system, which is much needed for a transparent and high integrity carbon market. At the same time, we're also going to do verification mechanism, as there's 9 sectors are already coming in the Indian carbon market, and most of them are hard to say which sector, and most of them are CBAM sector primarily. So these are exactly the same where capabilities required for CBAM compliance. So carbon market is also going to supplement the CBAM in coming days as Indian carbon market is going to be launched. And all this activity is also helping CBAM to reduce the transition cost, access to climate finance, and as well as better positioning in the global supply chain. So CMAI, what we see that carbon market is not merely a compliance instrument, but it is as a growth engine, growth instrument. And we're also glad to say that recent carbon market development, I think last week, Government of India has already done agreement with Japan. And there is a JCM protocol has been developed, joint trade mechanism. So now it is very clear that how India and Japan generate credit and how Indian credit can transfer to Japanese enterprise. And in return, India is going to get benefit in terms of either green technology or in terms of getting benefit either in terms of climate finance. And all those carbon pricing under Article 6 is going to be a much, much better price compared to the current volatile voluntary carbon market. We find that there is an immense opportunity for India to not only become a participant in the global carbon market, but also a global leader in the climate finance and carbon servicing and the carbon project development and creating a low carbon manufacturing ecosystem in the world. So India has ready for that carbon market opportunities. And I understand that when a strong carbon market will be formulated, it will literally help India to be more competitive in the CBAM era. Thank you.
Thank you, sir, for that. Now, Terry, I know you have done a lot of research, and again, from climate risk perspective, I would like to hear your mind on this question that I'm putting forward. So investors are paying closer attention to climate transition risk. And how do you see financial institutions and rating agencies incorporating these risks into their assessment of companies and sectors exposed to CBAM?
Yeah, it's a great question. And I think as the other speakers have said, there's still quite a lot of uncertainty, and with uncertainty there are many questions. So one of the things that we did earlier this year is we looked into how companies are talking about CBAM in their earnings reports, to get a sense of the prioritization of this topic amongst those companies affected. and what investors are asking. And of course, with this type of regulation, there's potential impacts on revenues, on earnings, on investment needs, all things that are very interesting to all sorts of stakeholders. So I think the key questions that we see out there and that we have as well are, how will companies respond to this type of regulation, and how they respond could vary significantly depending on how they're positioned today. So if we think about how CBAM actually works, it really matters what types of assets you have. So if you're a steel company and you have mostly electric arc furnaces, which are lower emissions per ton than a blast furnace, you're probably going to be relatively well positioned in terms of CBAM exposure to your competitors, and it's probably a little bit easier to decarbonize even more if you have that type of asset. And of course, no two companies are exactly the same, so the mix of those assets is really important, and also could give flexibility. So, just to give a sense of the uncertainties here, companies could choose not to export to the EU anymore, or they could dedicate their best assets to supplying the EU so that CBAM costs are limited. Or if you're a huge multinational company, you could serve Europe from your Europe facilities and dedicate the other ones to the rest of the world. So there's many different options here, and these are things that investors are really kind of focused on. It's what's the flexibility, and then how does that translate into potential financial impacts. But the other thing that we spotted as well is some companies are really feeling they're well positioned, and they're talking about even achieving green premiums on their products. So being able to charge a little bit more than they might have simply because the CBAM costs are a bit lower for their products. So the picture is very, there's a lot of variation that could potentially be out there. And of course, this year, the CBAM rate is only 2.5%. In a few years' time, as that CBAM rate increases, then this conversation takes on a kind of more important dimension. But just to pick up on a couple of things that the other speakers mentioned, scope expansion is a key topic that investors are interested in. So, beyond just the kind of more basic commodities, we're talking about finished products like washing machines and potentially more significant parts of cars and all that kind of stuff. And as Ieva mentioned, more regulators are looking at bringing their own CBAMs in or own pricing regimes. And so the picture could get very complex very quickly. But at the end of the day, investors are definitely focused on revenues, earnings, investment needs. And so that business case angle is really, really critical for companies to be thinking about.
Yeah. So thank you for that. Though I had a couple of cross questions, but maybe due to interest of time, I'll park those. So Dr. Tarini, you touched upon the challenges faced by MSMEs earlier. Now, could you expand on how smaller businesses can navigate CBAM requirements despite having fewer resources than large corporations?
Okay, so for MSMEs, micro, small, and medium enterprises, CBAM has become quite a challenge because of the complex reporting requirements, the compliance costs, which can price them completely out of the European market as well. And many MSMEs are actually seeing production costs rise by 5 to 8%. And then when you combine this with rising freight costs because of the West Asia crisis, you can begin to kind of understand the pressure that Indian MSMEs particularly are under. And also what needs to be kept in mind is that in India, MSMEs amount to about nearly 46% of the country's exports. And many of them operate in carbon-intensive industries, and many are embedded in the EU-linked supply chains as tier 2 or tier 3 suppliers to larger exporters. And they do contribute substantially to emissions. But on the other hand, MSMEs face a credit gap of over 30 trillion rupees. which limits their ability to invest in cleaner machinery or process upgrades, sustainability-linked technologies, and so on. And also, what must be kept in mind is that for MSMEs, the challenge is not just financial. Many MSMEs operate on thin margins, so they focus on daily production targets. So they do not have the room for long-term sustainability planning, sustainability investments, and so on. There's also awareness gaps. There's information asymmetry. This also becomes a challenge for them to sort of implement such policies and so on, but also to understand the business benefit for them of implementing this. So the steel industry, for example, is a case in point. When we look at India's primary steel makers, it's a carbon-intensive industry. It is dominated by a few large firms. But on the other hand, there is also a large role played by a lot of MSMEs, and which support, hundreds of thousands of jobs across India. And the dominant technology is, of course, still carbon-intensive, which is at odds with decarbonization and decarbonization targets. But then this is a very large segment. Many of the industries within it are MSMEs. And as of now, they do not have the complete infrastructure or the capacity to meet CBAM requirements. And primarily the issue comes in terms of infrastructure gaps, data gaps, compliance costs, and so on. Another issue that a lot of them face is the lack of plant level verified emissions data among Indian exporters. So even if one supplier in the chain fails to provide compliance data, the MSMEs can be sort of pushed into punitive default values. And no small industry, small exporter has the margins to absorb that kind of shock. So that becomes another issue that they are dealing with and that they're struggling with. And somewhere also we sort of need to understand the limitations of a micro or a small industry. For example, maybe a workshop with 15 workers having to meet the same reporting requirements as a multi-billion-dollar industry. So this sort of disproportionate, of course, in all aspects, whether it be in terms of infrastructure, whether it be in terms of having the finances, whether it be in terms of having the know-how of how to implement this. So this is an area in which MSMEs are very much have a weak position right now. And because of their vulnerable position, they do need a lot more support in this transition, whether it be in terms of the general climate transition and global goals and ESG transition, but also in terms of CBAM. And also, if you look at, for example, research that has been done, there's research that's been done by the Global Trade Research Initiative, which has shown that Indian steel and aluminium exporters may have to even cut prices by 15 to 22% to retain access to the EU market. So this is, of course, then a matter of great concern for MSMEs. And if you look at the scale of it, there's between 25 to 30,000 MSMEs, even more. By some accounts, which are exporting indirectly to the EU, which are now exposed to CBAM risk. And then there are, several thousand that are exporting directly to the EU. And most of these do not have compliance infrastructure. So I would say the first step or the first assistance that they need is in developing this the compliance infrastructure, whether it be in terms of the MRV infrastructure, and also then ultimately it boils down to being able to reduce your GHG emissions, and so the support they need in terms of doing that, in terms of setting strategies and implementing that. That's the first step that MSMEs really require. And already we are seeing now the first wave of shipment seizures and order cancellations from at European ports. So the impact is already being seen. So while on the positive side, of course, we have the fact that industries have begun shifting to biodegradable oils and renewable energy and so forth. So there is this pressure has had a positive impact in that sense. But then on the other hand, this having to make these changes also means that there's a rise in the production costs, by 5 to 8%. for some industries, and MSMEs do not have the financial strength of large companies. So that is where then they require the support. So the issue is not that this transition should not happen. This transition very much should happen, but the issue is that those who are in any way weaker, more vulnerable, need to be given the support in order to be able to transition smoothly. So otherwise, we have a situation where thousands of micro enterprises will lose their competitiveness in the context of the EU market. And also, it will also mean that we lose out on a great opportunity, because with CBAM, we have this pressure that is there on MSMEs, on Indian companies, or so this pressure can also be treated as an opportunity to aid these smaller companies in the ESG transition. So it is also a great opportunity that we can capitalize on if it is done properly. Also then in this regard, again, when we look at the expansion and the proposed expansion of CBAM, to possibly 180 new steel and aluminium-based products, then the scope of this expands. Many more industries are going to come under this. Many more MSMEs are going to come under this. So it becomes extremely then urgent, I would say, to give support to this segment in order to ease their compliance load.
Thank you for that detailed walkthrough on MSMEs. It was really need of the hour. Thank you. Now, though I have many questions, but unfortunately we are short of time. So I'm afraid we will have to close the session now. And I would really like to thank all of you for giving your perspective, taking out time, and the takeaways are really, really great. And I would like to sincerely thank for sharing your expertise, insights, and practical experience. Now, today's conversation has highlighted that CBAM is not simply a compliance requirement. It represents a broader shift in how climate considerations are becoming integrated into global trade, investment decisions, and supply chain management. For businesses, preparation starts with understanding emissions, as Ankit really rightly pointed out, strengthening data systems, engaging suppliers, and embedding climate consideration into long-term strategy. Now, for those who would like to continue this conversation in a more interactive setting, the Global Advisory Alliance, together with experts from Tarini Meta and Partners, will be organizing a private roundtable for business leaders and company representatives. Seats will be limited to encourage meaningful discussion and peer learning. If you would like to be considered for participation, please let us know after today's session. Thank you once again for joining us. We appreciate your time and engagement, and we look forward to continue this conversation with many of you in the future. Have a wonderful day ahead. Thank you.